What's going on, everyone? I just wanted to put together a very quick video about a potential rotation that we are seeing coming up here in the market. Today is Monday, August 24th, 2020. I've been seeing a lot of traders over the last couple weeks, especially coming into today, that have just been absolutely chasing these top leading tickers in the market, such as Apple, Amazon, really in the fangs, of course. These top leading 5 tickers in the market that have absolutely been holding us up this entire time, all the way from the March lows, with the inclusion of the Fed continuing to non-stop print trillions of dollars, injecting that into the market, which obviously you cannot fight against that. Obviously, something that we have seen, years and years further in time is that common sense is not so common anymore. You just have to think to yourself by looking at something like Apple or Amazon, really just any of these tickers in the market that are absolute parabolics right now, with really no signs whatsoever of pullbacks up until today. You just have to think to yourself and just sit down, sit on your hands, and really just think, who the hell is buying up here, right? And this is a perfect example of an opportunity for the market makers to have a great rotation in the market, a perfect opportunity for FOMO buyers to step in. Once again, you need dumb money in the market for the market makers to take advantage of that and dump on them. That's why I always say don't buy the breakout, don't short the breakdown. But apparently there's a lot of traders out there that like to stick to those methods. I mean, hey, if that's working for you, it works. And everyone has their own edge in the market. It's just something that I do not personally do as a trader here, more so a swing trader. And I just play simply supply and demand imbalance on the large time frame, with swings, of course, utilizing the options. Something I just wanted to go over in the next couple minutes here is, by seeing a lot of these tickers such as Apple, really the top leading sector in the market right now being the techs, and you can just flip through a couple of them as we will do it here on the video, such as Apple, Facebook, just absolutely ripping, and really comparing these tickers to a lot of these other sectors that have been lagging behind back from March, such as the cruise line industry, the airline industry, the casinos, the resorts, the hotels. If you really put them up side by side next to each other, and really put up something like Facebook, and then we pull up something like, for example, MGM Resorts, just by looking at how the difference in between of how high we have moved here on something like Facebook, for example, from its February highs, where we have fallen from when that whole COVID thing went on, that we're still dealing with right now, comparing it to something like MGM Resorts, that is still a distance away from where we have fallen from back in February. So the main point that I'm trying to get across is that it is very risky right now to be playing a lot of these top leading tickers in the market, such as those techs, that have just been absolutely non-stop ripping, and a lot of these COVID favorable stocks as well, such as Wayfair, Zoom, Etsy, PayPal. And as optimistic as you can be going into the future on them, that's completely fine. But just always remember that nothing's going to move straight up forever. There's going to be some point in time where we get a pullback. There's going to be a really, really nice rotation, which is the main point I wanted to make this video anyway. Something that we saw last week, which we started to see today, of course. And I'm going to pull back Apple up as my example here, as Apple has pretty much been my main barometer for the market here the last couple weeks now. As much as Apple really continues to grind up much higher, we're going to see the NASDAQ, of course, continue higher with that as well, ultimately lifting the SPY. And you can see that it's a very, very simple higher-low trend above all moving averages, higher highs, higher lows. The trend is your friend until the ever end. And of course, with all of the tech stocks that have been ripping, there's been a lot of other sectors, like I've mentioned, the airlines, the cruise lines, the casino, resorts, hotels, that have not been getting any attention to them whatsoever. And something that we started to see today, Boeing has been my main watch in the market here, for as long as I can remember, but really over the last couple months now, is something like Boeing here that has been really, really slammed down. And don't pay attention to any of these lines. I have to clean this up. Just by looking at the candlesticks here. So if I move over to the weekly time frame, you'll be able to see it a little better. Something like Boeing here, compared to Apple, that has been really, really lagging behind in the market compared to where we have fallen from back in February. We fell back in February from the weekly candle of the 17th February at 338.77. We're sitting at 178.20. I know there's a very clear, identifiable level of supply imbalance upwards of where we have fallen from back in February. And it doesn't matter to me how long it's going to take Boeing to get back there. What matters is how patient am I willing to stay? How patient are you willing to be on your plays and waiting for them to retrace back to the origin of the move, which we have made an impulse downward move from? Obviously, breaking any structure left, it's an area of supply. Price will always retrace back to it. Same thing here back in March. A lot of people were giving me shit. I'm sorry, back in June. A lot of people were giving me shit for going long on Boeing, and those same exact people, as I was getting out on Boeing upwards of the 220s, 230s, they were all looking to take a long, and now they're pulling their hair out as they're just getting screwed on the time decay, and we're just going flat, moving sideways. Just something to keep on watch here, going further into this week, going into September, is just keep in mind we're very overextended here on these techs, and there's going to be some sort of pullback, no doubt about that, right? We started to see a pretty nice pullback today on Apple, on Tesla, and a lot of that money that was being rotated into these lagging plays, such as the airline industry, such as the cruise lines, the casinos, the resorts, and the hotels. Those are the types of stocks that you want to be looking at in terms of really looking at anything in the market right now. It's very difficult to be taking a long on something like Apple, Tesla, Amazon, Facebook, unless you're really looking for a day trade or you're really looking for a scalp. That's a different story, but really looking to swing those weekly options overnight. I'm seeing so many traders just absolutely getting killed on them through the time decay. Obviously, in something like Apple or Tesla, you're getting lucky, but that's the opportunity for the market maker to give you that chance. You get really lucky with the momentum continuation going further into the next day and the next day, and you're getting super euphoric. Your emotions are getting to the best of you, and that is a perfect opportunity for the market makers to dump on you and rotate into something that hasn't been getting any attention to it whatsoever, such as Boeing and Carnival Cruise Line, for example, Norwegian Cruise Line, and Jets ETF. I put out a video last week, and I put up Jets ETF in the video. Jets ETF is a conglomerate of the airline industry, and just by looking at this chart too, look at this supply imbalance. This is where we have fallen from back in February at the highs around $32. We're still sitting at 17, so just about under 100% room of equity to get back to the supply imbalance. And I mentioned that we are stair-stepping up very nicely here in a higher low trend. We pulled right back to demand here. And if you move over to the weekly chart, we are curling very nicely above the 20 MA. Once again, I'm not recommending anything to buy or sell any securities here. I'm just trying to get a point across, as it's very risky to be taking trades and longs overnight, especially weekly options out of the money on something like Apple, Tesla, because it always comes to a point in time, it's a cycle of trading where you get lucky for a couple days, and the market makers know that, and they're just going to dump everything on you and rotate their money. And we saw that today, a very, very beautiful rotation, Boeing closing up about 6.5% on the day. And if I move to a lower time frame, you'll be able to see that. Something I've been telling the velocity trading community here over the last couple weeks now is just take a look at Apple and really just compare Apple every single day to something like Boeing, a lagging ticker in the market here. And you'll notice it's very fascinating that a lot of the days we'll see Apple absolutely ripping on up with Boeing resulting in a gap down or a sell-off, or the days where Apple's just kind of hanging out or consolidating, even pulling back a little bit. We'll see those days where Boeing really starts to pick back up and rip, and we saw that today. We saw a lot of momentum really shift out of Apple and Tesla, Amazon, really kind of cool off a little bit, and a lot of that money was being flowed back into something like Boeing. And the Jets ETF that I said that I mentioned in my video previously last week, if you want to go back, you could check that out, with Jets ETF closing up about 7.25% today. That I obviously have a position on this, so I may have an overall bias on it. But these are the types of tickers, these are the types of sectors that you want to be looking at in the market when all of the attention is really just focused on those top leading tickers that, everyone's just FOMO buying right now, and eventually that's going to result in some sort of sell-off and really just selling on all those retailers that are buying in at the highs and getting super emotional. And those are the types of traders that are just going to blow up their account after maybe getting lucky on chasing something for a couple, weeks even on something like Apple or Tesla. And you'll start to see that. You'll start to see as maybe Apple, consolidates, pulls back. Tesla, same story. You'll see a lot of the money in the market being flowed into something like Boeing and the Jets ETF here. The Jets ETF, really the top holdings for this is Southwest Airlines, LUV. And if you really don't want to look at every single one of these airline tickers, once again you can just look at Jets ETF and you'll be able to notice how pretty much all of these these airline companies are very similar to the Jets ETF chart, as it's a conglomerate of the whole. But the top 3 holdings for this fund are Southwest Airlines, ticker LUV, and then the next one is Delta Airlines, which I do currently have a position on, closing up very nicely today, just under 10%. Very nice stair-step pattern here, higher low trend, right into the top of the downtrend here. It's a slow ticker. Something I've been mentioning over the last couple weeks is that if you are to play these tickers that aren't getting really attention to them in the market right now, is either you're buying a bunch of time on your options, or you're just sitting out of it, or you're just pretty much buying the equity if you want to pay up $30 per share. And then the third one is United Airlines, ticker UAL. And you can just see, these have been really, really lagging behind, not doing anything whatsoever. And all they're really doing is they're building energy for their next impulse move. You have to keep in mind that in the market, we're only trending 30% of the time. 70% of the time in the market, we're going to be ranging. We're going to be chopping around, right? We're going to be in a kangaroo phase. And that's the time in the market where the market makers collect all the premiums, they're burning the time, and they're building that energy for their next impulse move. Just like we saw here back in June on United Airlines, on Boeing, same exact story. And all those traders that are not interested in buying any of these lagging sectors right now in the market are the ones that are either chasing Apple at the highs, chasing Tesla at the highs, or they're the types of traders that aren't interested in buying here. And then when you see United Airlines in a couple months or whenever that is up at $60, they're going to be the ones buying that, because that's when Apple's going to be pulling back. That's when Tesla's going to be pulling back. And that's just a cycle of trading. Everyone just wants to be where all the hype is, and I get it, right? That's where all the emotions come into play, and that's where all the volume is and whatnot. But you got to keep in mind that looking at something like Apple is just very funny. Just how overextended this is, right? It's once again, right? I'm not bashing Apple, I'm not bashing Tesla, right? I really don't care. I'm just a technical trader. I don't use fundamentals. The point I'm trying to get across is that there's going to be some sort of pullback. And when that happens, the pullbacks are more aggressive than the move on up. The saying that I like to use is that we take the staircase up and we jump off the cliff on the way down, or we take the elevator down, whatever terminology that you like to use. I'm just really trying to get the point across of common sense, that why would you want to be buying something like Apple at these highs here of 500 when you could have bought it at 300 or 250? And I get it, maybe you missed it, but wouldn't you want to look at something that has been lagging behind, not really getting so much attention to it, knowing that in the future they're going to make some sort of move? The whole thing with the news and the fundamentals, if you're a fundamentalist, I get it, nothing against you. We have great fundamentalists in the velocity community, but you could leave it to them, of course, for finding their sources. But when you're really looking at something like these airline companies and these cruise lines, there's just so much fear that's being put out there on the general public. All these news articles that are being thrown out there, don't buy the airliners, the coronavirus, it's going to really hurt business. And I get it, it will long term and whatnot. But just from a technical perspective, the market makers don't care about that, right? Because all it is algos that are driving the market. Keep in mind that all of these candles that you're seeing on something like Boeing or Apple, none of those candles are created by the retail trader. It's just not possible, right? That's hedge funds, institutions, banks that pay hundreds of millions of dollars for an algorithm that can move hundreds of millions of dollars, even billions of dollars in and out of these tickers every single day to create these impulse moves. So it's just something to keep in mind there. Just my 2 cents. Just keep an eye, on these tickers that I've mentioned over the last couple weeks now on YouTube here, like the Jet CTF, Boeing. And once again, it's not a recommendation to go out and buy these, because I do have an overall bias on them. I'm just trying to really prove a point here that you're seeing so much FOMO buying right now on something like Apple and Tesla, and there's a lot of euphoria with all those retailers that are just chasing and getting lucky day after day. But there's going to come a point in time where they all get dumped on, and that money is going to be rotated into something like Jets, like the airliners, the cruise line companies, which I didn't even really go over in the video, but you can take a look at those too. right? They haven't really been doing much. Carnival Cruise Line up about 10.5% today. I actually do have a position on this one myself. Norwegian Cruise Line, same exact story here, up about 8.5% today. So it's very interesting to see that, even if you want to run this exercise down yourself, I mean, go ahead. It's very, very fascinating to see how the market works in that sense. Even if you're not really looking for any trades, just pull up, anything you're looking at that's been lagging behind in one of those sectors, whether it's Norwegian Cruise Line, Boeing, MGM. It really doesn't matter. Any of those tickers that are lagging behind in those lagging sectors, and just pull up Apple or Tesla right next to it, and you'll be able to see the rotation of the money that's being taken out of Apple, being brought back into something like Boeing that has been doing absolutely nothing really, or something like the cruise line sector that everyone's being so feared over right now. It's just the cycle of trading, and that's how it pretty much works. Everyone's chasing it at the highs, and then when the next thing you know, in a couple months from now, you'll see Norwegian Cruise Line back at what, $30, 35, and that's when everyone's going to want to be chasing up the cruise lines and chasing up Boeing when Boeing's back over $200. Yeah, I'm just really trying to look out for everyone. I've been seeing a lot of traders just getting killed, playing weekly options, and really just chasing a bunch of shit. There's just so much noise going on in the market right now, and I can make this video, hours long if I really wanted to, but I just wanted to keep it about 15 minutes or under, which we're just getting over right now. So hey, if you have any questions or comments, concerns, whatever, feel free to reach out to me. I'll throw my email there in the description. Feel free to leave a comment there below. Hit the like button, help out the channel, and you can come over to the website. We stream live every single day, Monday through Friday, starting at 8:30 a.m. Eastern time. You can sign up for a free trial. No credit card, no debit card, none of that crap needed. All you really need is a name and email, and you'll have access for the week. So feel free, come on over, ask me any questions that you have. I'd love to explain further. I just don't want to make it too long for the YouTube here. But yeah, I appreciate your time. Thank you for listening, and keep killing in the market. Stay safe.